Welcome back to the Mountain Morning Show, and I'm joined by Travis McGhee from FuturesANIMal, and I'm really glad you're here today, dude. I'm freaking out. I'm freaking out.
It's going to be all right. It's going to be okay.
It's going to be okay. See how calm you are?
Yeah.
That says something about what you know that I don't know.
Well, I don't know if I know anything that you don't know, but I do know that we've been through this before. It seems like we go through this same circus just about every year. So.
Yeah. But there is something you know that I don't know, which is, you know, knowing what instruments you're using for your investments, and knowing the tools that are there to support them and to give you information and make sure that you do feel a little calmer.
Right. Well, as far as investments are concerned, I mean, you're absolutely right. You know, one thing, and we talked about this last week, we talked about it the first time I was on, one thing that I do, and it might be different than most, but I try to understand risk, certainly the risk surrounding my investments, and understand that I know exactly what I have at any given point in time, and that I'm protected.
Your exposure, you know what your exposure is.
Exactly, I know what my exposure is. So, you know, just like I said last week, if I go home at the end of the day, even though I run a company that, you know, revolves around investments, and you know, for a lot of people, if I'm not comfortable sleeping at night, you know, staying awake, worried about, you know, pending government shutdowns, debt ceiling talks, geopolitical risk with Syria, whatever the case may be, if I can't sleep at night worried about my investment, then something is wrong with that. Then
something's wrong with your investment.
Something's wrong with my investment, and I'm not properly protected. It's just like driving a car. If you're driving a car and you're worried that you're going to get in an accident because you don't have insurance to cover the cost of that car, should something happen, you don't have health care insurance, whatever the case may be.
You're not wearing your seatbelt.
You're not doing something.
Put that on.
Right. So it goes hand in hand with that. You have to understand the risk involved with what you're investing in.
No, absolutely. And you know, we were talking before you got here, really, the guys here this morning were saying, well, gosh, you know, the stock market could be crazy today. The truth of it is it probably won't, because now we know what to expect today, at least. Yesterday was when it was a little crazy because there was no, you know, there was no finite plan.
As
really,
crazy as it sounds, we actually have a little bit of certainty today.
Yeah, certainty.
Certainty, you know, uncertainty is the four-letter word, if you will. Even though it's not a four-letter word, it's the four-letter word of the market. Uncertainty is bad. Anytime you have uncertainty and you don't know exactly what's going to happen, even though yesterday we all knew essentially that a government shutdown was looming, that it was imminent, it was going to happen. There's still a lot of posturing in the market around that. Well, it could happen, it could not happen. Well, now it happened, so you have a little bit of certainty. The market today, I mean, looking before I came on the set here, you know, the futures were relatively unchanged, if not up a little bit. You're going up a little bit, so market could potentially open higher. You know, the shutdown, you know, added a little bit of certainty to the market. But with that said, you know, one thing I've been telling, you know, our clients, and I've, you know, been telling a lot of folks, is the government shutdown is the least of our worries, as it pertains to investment.
Default is what we're worried about.
The debt ceiling is the big question here, and there's going to be a lot more volatility in the market heading into the debt ceiling talks. So while we might have a reprieve from the down day we saw yesterday, it's going to be a bumpy road, and a lot is going to hinge on what we can get done with the debt ceiling.
Talk to me about the products that are available for investors that can put some peace of mind in, you know, what we're doing in the market.
Well, one thing, you know, with retail investors, and by retail investors I just mean everyday people that are out there managing their own money, have it in 401ks and IRA, whatever the case may be, we tend to pigeonhole ourselves into stocks and bonds. That's all that's available to me. That's all that I'm able to comprehend and understand. Quite simple concept with both of them. There's far more in the investment world than just stocks and bonds. And a lot of the instruments that are available to you now, especially in this day and age, are meant to help you protect and manage risk inside of your portfolio. So you have the options market, that's a big term, and some folks may not understand exactly what that is, but it's certainly something that's more popular today than it was even 5 years ago. And basically all options are is they enable you to control that risk inside of your portfolio in short segments of time. So you can buy options on stocks like Apple, IBM, Caterpillar. You can buy stocks on ETFs. You can use options to hedge risk in mutual funds. You can use options for a number of things. So they're an instrument available to you.
And are these ones that I suppose, if I understand it correctly, these are the ones where we're going to put lots of little measures on it, like stop loss and things like that on them. Is that right?
Exactly. So basically what options can do is essentially accomplish the same thing that a stop loss can, in that it can protect you to the downside, but you can also use options to capitalize on moves.
Right, even on negative moves.
Even on negative moves. So you can really make money in either market. So just for some basic terminology for the viewers, so an option, you basically have a call and a put. And I know a lot of people have heard this before, but a put protects you when a stock goes down. So as a stock goes down, your put gains money, and a call vice versa. As a stock goes up, you make money on a call. And these are instruments that have been around, quite frankly, since the late 70s. And they have been, historically a asset class, which they are becoming an asset class used by professional investors. Because, retail investors have always been told, well, Joe, there's just too much risk in options. You shouldn't use it. That's not true. Certainly there's risk. There's risk in stocks. There's risk in bonds. You ask bond investors over the past couple months how they've done, and a lot of folks have opened their 401ks and looked at their bond portfolios and said, wow, I've taken quite a big hit over the past couple months. So.
But I guess that's the point here, is that should we be, even with having the fast trade, the fast trading that we have available to us, the information, vast amount of information, should we be doing this on our own, or should we be involving somebody that can help us with it? I
think both. Can you do it on your own? Absolutely. It just takes a little bit of time. Again, we've talked about this the past 2 weeks. It just takes time to go and educate yourself. Spend a little bit of time every day. Learning about these different instruments, learning about options, learning about what a future is, learning about stocks, bonds, what's going on in the market, just a little bit of education. But that's not to say you shouldn't involve someone in helping you make those decisions, whether it's a financial advisor, whether it's a family friend. It just needs to be a trusted resource. I don't think anyone should go into investing alone. It can be a very lonely game. You have to have somebody to bounce ideas off of. Because sometimes, again, we put the blinders on, and something that appears to us to be a great idea, you ask a couple of other folks and they tell you aspects of that investment that maybe you didn't realize that turns that investment into a bad idea.
Right.
So you have to involve other people.
I hate to say this because it's such an extreme example, but to me, it's a little bit, because, all of this seems a little bit like gambling to some degree, but I always think about going to the craps table. I understand craps about that much, just enough to be dangerous. Always like to have somebody there who understands that game a lot better than I do. And like I said, not to compare the two as far as risk levels, but just the idea of how important I think it is. If you don't know the game, you better have somebody who does next to you.
That's a great analogy. I'm actually going to steal a quote from my business partner, Guy Adami. He's on does the Fast Money show for CNBC, but he always says when we go out and we talk to folks around the country, he's like, anybody can go into a casino and catch a hot hand at a craps table, and you can make a lot of money. That doesn't mean you're a good craps player, though, or that you necessarily, it was just luck, dumb luck. But you will find folks who go in to a craps table time and time again and actually understand the game that will consistently make money on on a bad table and on a good table. Same thing with the market. If you go into the market and you're just kind of haphazardly doing it, you're doing it for fun, you're going to get burned more times then you're going to do well.
Because there's rules to all of these things. There's rules to gambling, there's rules to investing.
There's rules, and there's understanding risk, calculated risk, and understanding probabilities. And if you don't understand the probabilities around an investment, the probability of that trade doing well or of that investment doing poorly, then you're setting yourself up for failure more so than you're setting yourself up for success.
Tell me about your favorite products in the market.
Well, my favorite products, just by nature, because that's the industry I got involved in initially when I first came into this career, was as an options trader. And I was able to see the power of options, the leverage that you gain from options as well as the risk management. And what I saw, and the reason that I started the company that I started, FuturesANIMal, was that I saw that a lot of the larger institutions, the very high net worth individuals, the trades that we were executing for folks, by and large, were option trades for risk management as well as for income generation. So I saw these, very wealthy, very, large funds using these instruments, and I was absolutely intrigued by it. And I said, well, why is it that more retail traders don't use these same trades?
Right.
So that is my love, because I think that there's a lot that you can do. That's not to say that I don't trade. Majority of my portfolio is stocks and bonds.
Right.
But I use a lot of options to mitigate that risk.
But that's the whole point. You're talking about diversification there.
Right.
Having that is an extremely important part of anybody's portfolio, regardless of where you're at in your investment cycle as far as age.
It's a tool, absolutely. It's like walking onto a golf course. If you have a golf bag and you only bring a driver and a putter, it's going to be a tough game of golf.
Yeah.
Options are another tool in that golf bag. It's just another club. And, again, going back to gaining help, I would hope that if you are, bringing in the help of a financial advisor or a trusted resource, whoever it may be, that they understand every tool. And they're not just pigeonholing you into just mutual funds or just the stock market or, just bonds. That you do have that diversification. And that's why it's important for you to understand the market as a whole and to understand these different products so that you're not placing full faith and credit in that person who's managing your money for you, that you actually have an understanding of what's going on as well.
Is there a real difference between the professional and the retail investor at this point now?
In my opinion, no. I've been on both sides. I'm a retail/professional investor now, but I was a professional investor for many years, and the tools that the retail investor has now compared to the professional investor, it's really no different. You have access to the same markets. That's what we do at FuturesANIMal, is we provide our clients with the same access that institutional investors have. The only difference in my mind is the discipline. Professional investors tend to be much more disciplined. It's a career. It's a craft to them. They spend a lot of time doing homework, a lot of time doing research, and properly manage the risk in their portfolios on a daily basis. And the connections that they have in their networks. The ability to call up friends at Goldman Sachs or UBS or on the floor of the exchange and see what's going on. Get the pulse of the market.
That's where the word hybrid comes in. It seems, right?
Yeah.
Be a retail investor, but have a professional there to assist.
Yeah.
I think is kind of the key.
And that's what we do, is we provide essentially a hybrid, to that professional investor, to where you can remain a retail investor, but you get to use us as your resource, because we have all those connections and we're constantly in tune with the market. We're following the market, we're managing risk, but yet we're involving you in that process so that you're not just out there and we call you one day and we say, well, Joe, sorry to say, your portfolio's down a lot today, and you're scratching your head thinking, well, what happened over the past 3 months?
Thanks for letting me know.
Yeah, so we're talking with you every day.
As we transition here, we're going to talk about a paper trade simulation that you and I are doing.
Yeah.
But before we go to that, is there something, with people sitting home today thinking, gosh, the market is going to be a little crazy over the next couple of weeks. Let's just say that they have a few investments, probably stocks, maybe, obviously their 401k, things like that. Do you have any words of advice as we go into this next week?
Well, my word of advice is don't try and get caught up into day-to-day. That's where a lot of investors get themselves into trouble, because as humans, we're very emotional people, and we tend to make rash decisions. I think everything's going to be okay. I still think there's a lot of value to be found in the stock market. There's certainly some value to be found in bonds as they've been really, I don't want to say massacred, but hit over the past couple of months. But my tip, and I've said this over the past couple of days to various folks, is just move forward, calm. Again, don't get caught up in the day-to-day. And if you are using a financial advisor, just give them a call and talk to them. Say, hey, what kind of risk am I exposed to right now? Is everything okay with my portfolio? Should I shuffle things around? You know, depending on how you're allocated, you know, they might want to, but you know, some might say the same thing I'm saying and say, you know, listen, this will be okay. So.
All right, well, let's talk about my simulation that we're doing, because I think that's kind of what we're going to prove out a little bit, is that a consistent thought here of what we should do over the next little while is going to pay off. Yeah. Is the idea here. So tell me about, we're going to put up a graphic here. Tell me about what we're going to be doing.
All right, so what I did is I wanted to do something a little different than just stocks and bonds. Again, talking about alternative investments, and something that we do at FuturesANIMal. So what I did is I took just a basic portfolio for you and I, just a model portfolio. Right. It's we're using $100,000 as the initial value of our portfolio, but you could do the same thing with 10. You could do the same thing with 500, whatever the case may be. But this particular trade that you and I are doing is on the S&P 500. Right. So we've got an image up right now, and the way I structured this trade, again, we're using options right here. So I don't want to overwhelm people with terminology. I just want to give folks an understanding of what we want to happen with this trade. So with this particular investment, you and I, we're allocating, out of $100,000, we're allocating roughly $45,000. Okay. That's the capital that we're tying up with this trade. Right. Now this trade has an expiration date of the end of the month. End of October. So this is a 1 month trade for you and I. So we're going to follow this trade for the next 4 to 5 weeks. And what this trade does is we make money if the S&P 500, we're talking about the index, stays between 2 levels. And I can't quite see that far away. So we've got. So we want the S&P 500 to trade between 1570 and 1790 on the upside. Okay. As long as the S&P trades between that range by the end of October, we get to keep the money that we collected when we put the trade on. So just like, you know, I don't want to say, it's not necessarily comparable to an insurance company, but, you know, as an insurance individual sells you insurance, they take in a premium, and if nothing happens to your car, they get to keep that premium.
And that's essentially what we're saying.
That's essentially what we're saying, is that as long as the S&P 500 trades within this range, we get to keep that premium. And on this particular trade, again, we're doing about roughly a $45,000 investment. We look to make just shy of $3,000, which would be right around, you know, 6.3% return.
Which is not bad.
In 1 month, right?
Yeah,
which is not bad.
Pretty good return.
Yeah.
What is our risk?
So the risk on the trade, on this particular investment, is that the S&P trades above that level on the upside, which again I think we said was
17, or excuse me, we got it at what, 1810?
Yeah. So it trades above that range, or it trades below the bottom range. So that's a pretty wild swing to the upside, pretty wild swing to the downside. But if it trades above that, then your risk is, you know, roughly that $50,000, just like with a stock. Right. You know, if you buy a stock, your risk is that the stock goes down to zero. So you have risk involved with this trade, just like any trade. But again, it's understanding that risk. You know, if you're approaching a level to where that looks like it might happen, you can always get out of the trade. You don't have to hold it all the way.
Right. We can get out of it early.
Yeah, exactly. Okay. So so again, this is an alternative type of trading to where you can put a trade like this on every single month. And if you understand your risk and you understand your probabilities, you know, you could theoretically, you know, look to capture that 5 to 6% every single month.
Great money.
Doing trades like this. So what we're going to do is, again, you know, anything can happen with this trade. You know, we're going to follow it just like any trade.
So we'll be talking every day or so.
Yeah, we're going to talk about it every single day and follow this and adjust it accordingly. But, you know, hopefully we come in the end of October. This trade makes money for us. We make our 6%. And then we'll put another one on for November, and we'll follow that one, so on and so forth.
It's exciting. I can't wait to do it. Especially when the things are a little volatile.
Yeah.
It's exciting.
Yeah, so it'll be fun.
All right, Travis McGhee, FuturesANIMal. If folks want to get a hold of you and do something besides a paper trade,
right.
What do they do?
So it's, again, just FuturesANIMal.com. You can read a lot about us there. You can open demo accounts and actually take some of the ideas and put them to work that we're doing. and just like you and I are doing with some paper money. And if not, you can always talk to us about getting involved with our community.
Yeah, find out what you can do with all of your investments that you might have now. If you want to have somebody help manage it.
Right.
There, ready
absolutely.
to do it.
Absolutely.
All
so,
right.
Thanks, Joe.
You bet. Thank you very much. We're looking forward to talking to you every morning. And of course, we'll be talking to you every morning about what's going on with it too. So I'm excited about that. All right. Well, we've got a lot more coming up. Spore will be here shortly, and much, much more right after these messages here on Park City Television's Mountain Morning Show.